hard money mortgage loans.
Hi, my name is Brad Zitzner, and I'm a real estate investor from Springfield, Ohio. And I buy and sell houses. I focus on wholesaling properties. In the past couple of years, I've been able to wholesale just under 100 properties. And one of the things that people ask me all the time is, how do we finance REO properties? And there's 6 different ways that we go about financing the properties. And the first is to use private money. So what we'll do is we'll buy a property with another investor's money, and we'll typically pay them a set return on their investment. So we pay them either monthly fee, or we'll allow that interest to accrue over time and pay them when the house sells. The second thing when we're wholesaling properties is we use transactional funding. So we'll often pay as much as 2% to borrow funds for a single day. So they'll put up the money and it'll go to the title company, and we'll resell the property on the same day. So that transactional lender gets a fee for doing that, and they get their money back, and we just get a check for the difference in the two prices, minus the 2% for transactional funding and then closing costs. The third is to use bank financing. So we're still working with a lot of local banks, and we're not going to the brokers anymore, but we're just going to local small banks that are still lending in the LLC's name, and that's becoming more and more difficult to find over the last 2 years, but we're still able to do that with a number of local banks. The fourth one is using soft money. So a lot of the hard money lenders have kind of softened up their terms, and we're using some of those hard money lenders. We call it soft money because we try and use lenders who have 3 points or fewer, and sometimes we're getting interest rates as low as just under 8%. So it's 3 points and 8%. The fifth way is equity partnerships. And what we're doing with equity partnerships is a lot of time investors kind of want to get an action on the deal. So instead of just getting a set return, we actually give them a percentage of the profits of the deal. So they don't get an interest rate, but instead they just get a percentage of the profits. And then the final way is we use credit lines. So instead of putting a traditional mortgage on one of our properties, we will put a credit line that we can borrow up and pay down. And the main reason for that is that when we're not using that money for a rehab, we don't have an open loan balance, so we have a cheaper interest rate, rather than if we got a traditional mortgage, that money would just go in and out of the checking account. So those are the 6 ways that we're financing REO properties in this market. I hope you enjoyed that video. I wanted to let you know that I actually have 17 other videos just like that available for you, and I made them available temporarily for free. And the place you can get that is bradsfreeoffer.info. Again, you go to Brad's, B-R-A-D-S, freeoffer.info.